We're more in an age of consolidation right now, in the middle of this cycle, than we are in sort of new platforms and new lessors emerging.
This is the Time on Wing podcast. Welcome back. I am Courtney Miller with Visual Approach Analytics. With me, Garrett Deschavon of Collateral Verifications. Garrett, who is it today?
Today, we are chatting with Tim Bacchus of Avation. Tim has got a really interesting background. He is currently Investor Relations Director for Avation. Prior to that, he was a Senior Industry Analyst for Bloomberg Intelligence. Is also Aviation Business Services for Pratt & Whitney Canada. I'm sorry, not Pratt & Whitney Canada. Yeah, there we go. PwC. Sorry, a little bit different. Same letters, different name. He was also SVP of Risk for CDB Aviation and Director of Asset Finance for Deutsche Bank. And then prior to that, he had various positions kind of on the equity research side, working for the likes of like Morgan Stanley, Deutsche Bank, Lehman Brothers, Macquarie Bank. So he's been in the industry for some time. He has a Bachelor of Science in Mechanical Engineering from Columbia University, and he is also a CFA charter holder. Tim, this is your time on wing. So before we get on with our guest, which you guys are going to absolutely love, we obviously, first of all, we want to thank all our listeners for listening to us and making the show what it is today. And we certainly welcome any of you to, whenever you see us at conferences, just please say hello. And we'd love to hear that you guys are listening and fans of the show. As you all know, we do run businesses. And so from my end at Collateral Verifications, on the appraisal side, right, obviously, if you have any needs when it comes to aircraft, engine, landing gear, you name it, right? Just please feel free to reach out. I'm very approachable. I'm happy to chat about any kind of projects, and we'd love to work with you on a variety of things. We do have some publications out there as well. I do the Turbine Aircraft Guide, Turboprop Value Guide. I've got the Aircraft Rating Tool. So there's various publications that we put together that can kind of help you on your day-to-day. Great reference points. So definitely, kind of reach out to us, and we'd love to chat and kind of start that relationship with you.
Okay. Back to the show.
Tim, thanks for joining us on the podcast today. It's great to have you. And, we're looking forward to kind of having a great discussion with you on kind of your space and what you've done. But as we always do with every one of our guests, is we love to hear kind of how you got your start in aviation and where the passion came from. Everybody's got a different story, which is always great.
Is there passion? We can't assume.
We can't assume. Sometimes there isn't. That's true. Sometimes it's just more like, well, I was told to do this, and here I am. But we'd love to hear that from you. Kind of, get the conversation started, and then we'll go from there. But I'll let you take it away.
Yeah, look. So thanks, Garrett. Thanks, Courtney, for having me on the podcast. It's a great product. I listen, and so I'm really pleased to be joining your really esteemed lineup of previous guests. So yeah, it is passion. My story in aviation probably went back to when I was, I would say 8 years old, maybe a little bit younger. And, my dad came back from a trip and he had bought me these die-cast metal airplanes. I think the first one he got me was a Continental 707. We had some good 70s airliners in there. I had a BOAC VC-10, as I recall. Maybe an Eastern L1011. So, that whole kind of lineup, right, from the 70s. And I started to draw those. And, I think I still somewhere in my mom's garage, much to her chagrin, have, some of those, in boxes
Nice.
in there. But certainly my drawings got better over time. But, that planted a seed. I was really, interested in these airplanes. And I discovered at my local library in Independence, Missouri, in the reference section, these books, Jane's All the World's Aircraft.
Yeah.
And I loved going through that stuff. So when I, in that time period, I was probably looking at the 757, 767 were in development, but then I could go back and look at the old volumes, from the 1960s that were still on the shelf there in the library, and look at when the 747 was still in development, and the Concorde. And just became fascinated with that whole process. And then they also had in the library the Aviation Week and Space Technology magazine and the whole archive. And so, eventually, this is a weird one, I ended up subscribing to Aviation Week and Space Technology. Somehow got my parents to pay for that. And I think people in the industry, they actually, they got a discount, but I was just some random teenager in Missouri subscribed. So I think we paid full price, but I'm pretty sure I was really one of the only teenagers, I don't know, in the country subscribing to Aviation Week and Space Technology. And so, but that was a great, weekly hit in terms of the stories and wanting to get involved. And eventually I decided, look, how can I, make my way in this industry? Everyone starts out kind of thinking I will be a pilot. And my thought was, my vision maybe wasn't good enough. I thought maybe pilots back then didn't wear glasses. And so it kind of morphed into more like, maybe engineering, like aerospace engineering. And so I ended up studying engineering in university. And then it morphed beyond that to, when I was in college, I had a subscription to the New York Times, and so plug placement there. And I would read these stories about airline analysis. There was Morgan Stanley analyst. It was quoted in the paper every day talking about, I want to say Braniff, but I think Braniff was probably gone by then. But, whether it was Eastern or Texas Air Corporation or American Airlines, whoever it was, right? And I thought, that might be interesting, coming at it more from a financial angle. And really, that's kind of what ended up setting me on the path that I ended up on.
How many if you go to an ISTAT, which is kind of the aviation financing community that we think of, how many people you think at ISTAT were engineers in school? I'd say half.
I don't know the answer to that. So I wouldn't argue with you whether it's 50%, but there are quite a few. And I guess the interesting thing, this is more broadly speaking, is that, how many people who studied engineering don't actually do engineering? The way I made the transition was, so I did actually do an engineering job out of school. It was not in airlines or aerospace. It was in defense, though. It was with a shipbuilder. So a Navy defense contractor, yes. And I think pretty quickly I learned maybe that wasn't for me. I'd always kind of worried about, I wanted to work for Boeing, but I ended up staying on the East Coast for various reasons. And, Grumman was pretty much the only player in town on Long Island. So I was thinking, how could I get a job there? But they were pretty much getting out of the airplane making business by the time I graduated. And so ended up getting that other defense contractor role. And, the worry I had was, if I was going to go work for Boeing, I was going to have to work on a flap actuator, some little small piece, right? And I wanted to see the big picture. I wanted to be like the aerodynamicist. I wanted to be the guy building the models, putting them in the wind tunnel, all the stuff that seemed, I guess, more sexy. And I think you needed to work your way up through that. And I guess maybe I didn't think I would have the patience to do that. So I ended up, I'm moving to Wall Street, basically. Right there in New York City, that was an easy path to get into finance. I moved to Hong Kong, and I was lucky enough then to find myself in a situation where I could join one of those equity research departments at a bank, which was exactly what I was reading about. When I was reading, this was Kevin Murphy. He was a shout out, I guess, to him from Morgan Stanley in the early 90s, and all their other contemporaries from that time. But I ended up getting, into a space. And then once I got inside, I wasn't initially covering airlines, but, my managers saw that I had a passion, and I had like a stack of airline, physical hard copies of airline annual reports on my desk from every single carrier in the region. Thai Airways, Korean Air, Qantas had just listed in 94. And so, it became natural that I kind of moved in and started looking at Cathay Pacific as the first one, and then just, kind of took off from there.
Yeah. So what made you move to Hong Kong, by the way? What was the draw there?
Oh, we're getting real personal now. This is the short answer is adventure.
Sure.
The longer answer is that I thought that I would go to business school and I would get some international business experience. I think that was sort of probably still today, with de rigueur, or a prerequisite to getting into a good business school, right? And so one of the first things I did after I landed in Hong Kong was I took the GMAT. and I did very well on it, but I ended up never using it. And so I started, I guess, making money in finance and never looked back. What I did do, and I don't say this is a substitute, but I ended up studying for the chartered financial analyst, charter. Mm-hmm. So got the CFA charter, and that obviously was very appropriate to the line of work in terms of looking at investments and looking at listed companies and looking at airlines and other aviation industry adjacencies.
Yeah. Okay.
So it has occurred to me, and here's a book idea for you. Not that you don't have enough going on. My suggestion for you to make literally dozens of dollars is to write a book from the analyst perspective. And I don't mean like, here are the numbers, this is what it did. I mean the personalities of these crazy people. Hunter K, Jamie, this is just today's, right? Jamie Baker and Elaine Becker and all this. Like, so you would know, like the little secret things they say. You're like, oh, that actually means this, or he's pissed off about that. So there you go. Literally, you could be 100 Air.
Translate the language.
Translate the language. That's right. Yeah, that's right. When an analyst says this, this is what they mean.
Yeah. So I could be like the Michael Lewis, right? Instead of investment bank from the research side.
Yeah. There you go. I mean,
he's made dozens of dollars too.
Literally dozens.
Yeah. I mean, you could probably sell at least what, $10, $12. I mean, yeah.
Well, you got two right here.
Yeah. Try.
Well, $24, $36.
Yeah.
Yeah.
Cool. Yeah. So you're in Hong Kong. I'm sorry. Go ahead, Garrett.
No, I was just going to say, so kind of take us through, so you worked for various companies on the equity research side. How did you transition from that into more of what seems like, asset financing, those kind of, can you take us through that a little bit?
Yeah. I started attending the Air Finance Journal conferences in Hong Kong, the Asia Pac one, really early on. I think I might have been at the first or second one. It was in 1999. It was in a typhoon at Pacific Place, which is where, if you're familiar with the AFJ conferences of old, they're always in the Conrad. This was at the Marriott. And it was a T10, which is basically a hurricane warning. And all these other delegates who'd flown in from everywhere else were, there. And so they could go to the conference. And I decided I would just head out to the hotel because the eye of the storm basically passed over, and then I got stuck there on the other side of it. So that's a little aside, I guess. But starting with that, I started to make inroads and connections into the aircraft finance and leasing community, right? And one of the reasons for that was, look, I was, as an analyst, trying to find ways to bring different perspectives to investors, and so going to those events, talking about understanding where airline customers were having pressure points, or what were they paying for aircraft, what were the trends, etc. Because you're looking for something to differentiate yourself from other people who are analyzing the business. And so again, I was, I think, one of the very, very few equity analysts who would attend those things. Sometimes you would find that there would be a person in the first or second day who would get up on stage and present, but in terms of actually attendees and sort of mixing with delegates, I did not find many others doing that.
I find that interesting.
Kind of how I got into it.
Well, why do you think the other or your competitors, I'm assuming here, why do you think they didn't? Is this like your competitive edge? Like, did you really kind of find this as kind of the way you could stand out?
Well, I mean, there are a number of ways you try to stand out. Certainly, getting and building relationships. Airline managements attend these things too, and so if you can get somebody, I'm not saying off guard, but you get them, just at a drinks or a mixer or things like that. It's much better than trying to get them on the phone or in a meeting, et cetera, where maybe they're not as open, right? But I think that. And so that is one element, right? Getting corporate access, like being able to say, I've got a good relationship with management and I can introduce you to investors when the time comes, is one thing. But it partially is about passion, which we talked about earlier, right? And so I always kind of saw myself as an aviation guy who was doing the job as an analyst, but others are just analysts, and they're kind of agnostic about what they cover. They could switch. I could do, manufacturers. I could do defense. I could do automotive. I could do, banks and real estate are a little bit special, right? But, there are people who are analysts covering aviation, and there was kind of the other way around, if you can put it that way. And so that passion, I think, led me to those attendances at those events, rather than somebody who's just kind of doing it, just because that's the job, right? It maybe is not going to take the next level, try to, go into the supply chain, if you will, right?
I think of Jamie Baker, obviously, today. That guy is aviation nerd to the level that is rivals myself, probably exceeds, quite frankly. And he would take that as a compliment that it is. But you totally see it. And there's arguably, because we kind of all are, very passionate about the industry, but there's this competitive edge that just comes from that, especially in aviation, because it's so damn sexy. This industry is just so sexy, right? So a lot of people want to be in it, but it's the truly passionate that actually kind of find that edge. That's very cool. It's glad to see you're among good company. That's for sure.
I think what you're saying is av geeks.
Look, we have all sorts of names. Yeah.
That's right. That's one of the many names.
Yeah.
But yeah, nice. So is that how you gonna move into, I guess at that point, were you Deutsche Bank, and were you still Hong Kong? At this point, is your entire career Hong Kong based? Is that
it has been?
Yeah. Wow. Okay.
For 30 odd years now. Minus a few months in Shanghai back in 2003 during the SARS epidemic. So that was an interesting place to ride it out, but I think it was safer there than it was in Hong Kong. So I know it's been Hong Kong, but yes, I think, the transitions, if you will, are really around the idea that, you've been doing something for a while, like for 20 years, and you can certainly see that there are other ways to come at this industry, right? Other perspectives to be had. And so I had actually took a small break, I think in 05, 06, right at the beginning of the wave of low-cost airline startups in Asia, and did some consulting so that, got a little bit of a taste for not just, looking at stuff, but actually doing stuff in a way and working on transactions and deals. And I think that really also whets a different part of your appetite. And, so looking at, I was doing things like, creating or helping write business plans, right? Or business plans to look for investors for financing, or to scrub down ones that had already been written, essentially. And then, on the investor side, just kind of say, well, do we think this is a good plan? Should we go forward or should we didn't? And I can remember in some of those, working on someone in India, for example, we said, no, don't proceed with this, right?
Yeah,
so there was a desire to look at, to come at this from a different angle. And when I became a banker, right, it was similar. It was like they saw that I had these relationships with the airlines and airline managements, and so take and apply that, and then start actually basically pitching them the money, not the metal, but the money side of things.
All right. So then, when you look at all that, then how did you get involved with Avation, right? Because you've been there not that long, right? I don't think. Where did that come from? And then, tell us about Avation and what you guys are all about.
Yeah, so I've been with Avation now for since the end of last year, a little bit like earlier in December. So not a huge amount of time, 4 or 5 months now, and have come on as investor relations director. And the idea here, from our executive chairman Jeff, is that Avation hasn't had as much focus on particular parts of the investment market, and we needed to raise our profile, raise our game, and increase our exposure so that people understand our story, really. And I think looked at the fact that, I was an analyst for many, many years. So I sat on the other side of the table, right? I dealt with IR directors, and I dealt with CFOs, and I dealt with managements. But I also was, of course, dealing directly with the equity investors as well. And so it's a perfect kind of transition. And again, looking at things for the first time in my career from an IR perspective. But the idea is that we don't have enough penetration in the North American and particularly the U.S. investor base. If you look at our shareholdings, is maybe 4%, something like that, is actually held in the U.S. and maybe another similar, maybe smaller percent in Canada, right? And the idea is that while we are a London-listed company, we can't and we shouldn't be ignoring the U.S. capital markets and the U.S. investors because it is the deepest and largest in the world, and it is easily, a multiple times bigger than, for example, the UK market where we're currently listed. And so that's kind of the effort, and that was the reason for bringing me aboard. We had a period where we didn't really have an IR director, and so again, there wasn't as much focus and attention on that coming out of COVID, but we're in a good spot right now with regard to growing the business again.
So what US, I can't remember if Canada is included in this, but it's like 40% of the aviation market, right? That's a little bit different on the investment side for sure.
Mm-hmm.
But every time, of course, look, I'm biased. I sit right in the middle of the damn country. So it's what I see, but it is a major market. It's kind of those you get a lot of those tier one carriers and not a lot of yield to be found here, but a lot of those big players. And can I just say, first of all,
no,
listen, yeah, I know. Investor relations is where it's at. So for all these companies out there, I get contacted, airlines primarily, from the communications team. Love you guys. Mm-hmm. You're great. I want to talk to the investor relations guys. Like that's the true story. That's where the rubber meets the road between kind of what the airline's doing and what we want to hear. And yet here you are telling the story. And I also want to say thank you for realizing that the best way to get that story out is the Time on Wing podcast.
Yes. Yeah. I advertised this to at our management meeting. I think just
awesome.
The other day. I said, hey, we're doing the Time on Wing podcast this week in terms of promotional materials that we can sort of point to next. You ask, or I guess you ask about Avation, right? And so maybe a step back and talking about us. So we've been around for 20 years. We're celebrating our anniversary this summer. Mm-hmm. I've actually known, even though I just joined the company, I've known the senior management since probably 2015 or so, and the people I'm working with now. So it's it feels familiar in that regard. We are a full service leasing platform. We're obviously one of the smaller size, but we are, we've got the full in-house capabilities. We're not an asset manager. Our assets are on our own balance sheet. So, we're a microcosm of somebody who's a much larger, investment grade lessor. Obviously you can point to AerCap or somebody else, but we're like those guys, just in a smaller vessel, essentially. And, we do have this, reputation of being a regional lessor. And I think a lot of, sort of the questions and things we might discuss are going to be on the regional market. But I think it's important for the listeners to understand that, 60% of our book value is actually in narrow bodies. 10% is we've got a single wide body. And the other 30% are turboprops, right? And so those are our ATR 72s. But, if you look at it on a unit basis, yes, so 17 or roughly half of the fleet is in turboprops. But of course, on ticket size and on book value, we're actually look more like a narrow body or look more like what most of the whole broader market looks like. That being said, the ATR product is very important to us. So I mentioned that we're about 33 aircraft today. Prior to COVID, we had gotten up to 48. We had very, very good growth in the 2010s. And then, of course, we had some restructurings in terms of our customers. We sold some aircraft, et cetera. And so we shrunk the fleet, but a little bit on the balance sheet side. But now we're on that sort of path to growth again. We've got a pretty clear runway that we can see out through the end of this decade with our ATR order book and also the purchase rights that we haven't exercised yet. So we have 14 firm orders and we have 19 purchase rights for ATR. And we've exercised everything out to, I think, basically the end of 2029. And so from 2030 to 2034 is where our purchase rights sit. And so, it's a good time in terms of the cycle and many other sort of elements coming together to sort of, bring me on board and to tell this story.
Yeah, this is okay. Now you're talking my language, right? I'm a huge regional guy just because it's just a fascinating market. You know this. But you mentioned earlier narrow bodies was it 40% of your book value or 60%? What was
60%.
So 60% book value, which is the right way to look at it from a lessor, right? Is book value.
And revenue is linked to book value as well, or to asset values. Yeah,
of course. And so, so the order book, you're talking about the ATR order book are these speculative orders going out to 2030? I think you said 14 of them.
So the ones that we've exercised, yes, go out to, I think, December 2029 is the last position. Obviously, that could change the closer we get to that time. If in fact,
if 2029 even gets here, we don't know. I mean,
well, yes, I mean, there's
that's right. Dave's still young.
That asteroid's still coming in 2029.
Yeah, right. Yeah, I've seen the movie.
That's right. I haven't looked at the news today, so who knows?
And then so I'm really interested in. Just kind of something that you were mentioning, kind of the idea of the perception of a regional lessor versus a lessor. I don't fully understand why the prefix necessarily needs to be there, the qualifier of regional, other than it suggests higher yields and a more profitable company from my perspective. But is that difficult to get past?
So I think, there's less issues when you approach an airline, right? I mean, everyone in the airline space.
They know.
No, exactly. They know. And of course, if they're flying regional aircraft, and they want to talk to us, right? So, on the investor side, there are some issues potentially in terms of, you might just call it education, right? To overcome. Mm-hmm. Particularly, and not every investor comes at this with a specialist mindset. In fact, most don't. Most are generalists. And there's plenty of places to put their money when they want to invest. So you really, how do you stand out from the crowd? We are one of just 4 in my comprehensive count remaining pure play listed aircraft lessors. It's just us. It is BOC Aviation. It is China Aircraft Leasing, company or group, Calc, and it's AirCap. Right after just a few weeks ago, we've taken out Air Lease Corp.
Mm-hmm. Right.
So there's not a lot of lessors in the world if you want to play this cycle and play this space, which is one of sort of our pitches at the moment in terms of why investors should pay attention to us. But we're the smallest of those group, and so really trying to stand out from the crowd and to get ourselves elevated is an issue. When I talk to some investors as we go through this process, it's very interesting. I had one in the U.S. tell me in the first quarter, jets. It's all about jets.
What, the ETF?
No, it was no.
Or just the aircraft.
The aircraft.
Yeah. Okay.
Good call, ETF. But it was like, in order for you guys to be real, you've got to move into jets.
Oh, bugger off! Like, listen,
it was like,
you want to talk about sexy stuff in leasing? Pallets, boats, like rail cars. Like if an airplane has a prop or a turbine on it, like, are you kidding me? In the grand scheme of leasing, like, come on.
Yeah.
And it all comes down to the understanding, right, of those markets to know why that comment is kind of a silly comment, right? In terms of like, well, yeah, you only know so much about what we do, right?
Yeah. So I think you made a point about higher yielding, right? And so if you think about even, why does Avation care about this space, right? Why are we one of the relatively few? And so, in fact, just as an aside, we are one of only 3 lessors which have a speculative order book with ATR. It's us, DAE, and Abello, I believe. And and our backlog is the largest now with us. Actually, we've got 14, they've got 7, 8 on the backlog. So it's not a lot of people who are playing in this space, which does give us a competitive advantage. But, the fact that there is less competition in the space does produce higher yields. Now, I was a risk manager at an aircraft leasing company, it's with CDB Aviation for many years. And so I understand that when you also deal with the regional asset, you are going down that credit spectrum. There is a reason partially why you're getting higher yields because, there's a risk premium to be had, but it's also because there is less competition as well. And so you can get LRFs, closer to 1, right? They're not 0.7. They're not 0.55 at the trough,
right.
et cetera. You look at what was our portfolio yield in the 6 months ended December 31. It was 11.5%. Not bad. And so the turboprops are bringing that up, and the other asset types are probably bringing that down. But overall, we're at 11.5. Even with 60% narrow body fleet. So the point I think I would try to drill down on with regard to this jets comment is that. You guys are both in the U.S. I came from the U.S. I remember when it was a turboprop market. It was a regional turboprop market. We had all those Brasilias flying around, right? Yeah. We had certainly ATR 42s, and we had Saab 340s, et cetera. And they were flying for regional affiliates of major U.S. airlines. And so, hey, everyone kind of understood, and that was accepted, right? When you had to fly in some of these smaller routes, the EAS routes, et cetera. But of course, what happened in '92? We had CRJ, right? And
Courtney.
And Comair, Cincinnati.
Yeah.
And the market changed. And so the perception as a passenger, right, to just fly jets, I feel like, that filters down from a consumer perspective to some of these maybe prospective investors who are thinking, oh, well, why are you in that space? And, even today, really, we know it's not a big turboprop market. The U.S. doesn't have that many, not that many Dash 8s and not many ATR 72s flying around. Silver Airways, I think, had some, and can't remember, there's probably some in Alaska, et cetera, but not many else. So,
yeah. I mean, in North America, you've got Jet Suite X has a handful now. And like you get to like Air North and some of the guys in Canada. But yeah, look,
Canada's different. Canada's different. Canada actually
is the largest turboprop market. Yeah.
Yes.
That's wild.
And so I know you asked me this question, and I don't want to jump the gun too much, but, in terms of like, where do we think the market is, or where do you think, Avation will be going? Certainly it would be great if we could build up our Americas presence. We've got our first aircraft with Click in Colombia, just only at the end of last year, transitioned out of Asia Pac into South America. And, we're looking and have looked at that Canada market. So not so much U.S. maybe, but certainly, Canada and other places in Latin America as a place that could be good for business.
Yeah, I mean, the U.S. market is definitely a rough one to get into. Although, what always makes me laugh is, in an environment where people are more green focused, more, about reliability and everything else, like, what's more green or reliable than a turboprop, right? I mean, when you think about it, just has those pesky props, right? That people, for whatever, don't like. But it's amazing, right? And yet, that hasn't really made more progress into the U.S., which is a bit surprising to me that airlines aren't using that to be like, yeah, look, you want us to be more efficient, you want us to be, safer and more reliable, and like, okay, well, that's a great product to do that with. But yet, I think the rest of the world has kind of figured it out, but the U.S. is still kind of behind a little bit on that.
Yeah, I think with the push towards decarbonization of aviation, and obviously there are some things which are slowing that process down at the moment. Whether it's policy, whether it's just the actual situation in the world, geopolitics. I mean, I think certainly that's the next step for turboprops, right? And eventually, if the fuel efficiency is there and the green aspects are there, then the American market will end up accepting it, I think, because the airlines will actually do it first. And I think that whole perception shift in the passenger side could easily occur again, and it may have to even on the jet side, right? You look at what's happening from the engine OEMs. ultra fans, or maybe ultra fans not the right example, but certainly like the Leap Rise from
program,
CFM,
yeah.
where basically we're talking about open rotor, right, or open fan.
Yep.
And those are so much for fuel efficient. People will say, oh, they'll walk up to an airplane in 2035 or whatever it might be and say, oh, it's a turboprop.
Yeah, I mean, turboprops are...
Why is the fan outside?
Turboprops are geared turbofans that have the highest bypass ratio, right? And we've had them for years.
Yes.
Where I think it's so interesting where Avation sits and kind of your mandate, if I could call it that, going forward, is that look, there's growth in the turboprop market, but it's a small market, it's a high yielding market, but it's a springboard, right? It's a very strong and steady base for you to then kind of leap into, probably the wrong word, launch maybe into the narrow body. And growing that market, which is already 60% of your business. One of the best responses I've heard a lessor make to an investor or a potential investor regarding turboprops. The investor said, we just don't, I don't know, turboprops seem risky. We just don't understand it. They said, great, thank you. Because your misunderstanding of the market brings us the yields. Because if everybody realized how good this market was, they would jump in it and everybody would be doing it. So that's great and that's fine. That's how we make money. But that base then, particularly from your perspective in kind of launching and growing, there's kind of this potential energy on the narrow body side, particularly like from Avation's perspective, where using that base that people think of as Avation, and then all this potential growth and like I said, as the base or the pure play lessor, it's all on the narrow body side. I find that absolutely fascinating.
Yeah, so I think that's a good way to look at it. And if you look even at our track record, right? If you go back 10 years, we are averaging at least 2 secondary market acquisitions every year, right? And so, I've actually included that in our latest, investor relations material, showing how this is what our growth looks like, with the locked-in, built-in stuff, and this is what, if you assume a couple transactions a year on the narrow body side. I mean, it could be a wide body too, but let's assume narrow body. We've got a pathway to a fleet of 76 or 78 aircraft, I think, by 2034 or so. We certainly would, by the end of this decade, even without the narrow body acquisitions or any secondary market acquisitions, we will be back to our pre-COVID size, right? We'll be back to close to 50 aircraft, I think, by the end of this decade. So, and that's not that far away, right? Let's say 3 years, 2 to 3 years, right? So we definitely do want to continue to keep the fleet and the portfolio diversified, and we want to have those narrow body aircraft, because what we like to do is, we certainly, from the book value perspective, we want to mirror what the overall market looks like anyway, right? And there's probably a flip-flop between our turboprop percentage and our wide body percentage, between the 10 and the 30%. And honestly, the narrow body today is probably 70% of the market in terms of size. And so we're probably slightly underweight if you want to look at it from that kind of investment language perspective. But, the challenging thing is this, and this certainly opens a new line of topic of question and discussion, is...
Oh, we're good at that.
It is, yeah, we just digress, right? It is the fact that, look, it's a tough market out there in the secondary space. How do we're out there in the market every day, we're seeing aircraft deals come across our desk, our commercial team, and, what makes economic sense? Because it's a seller's market, right? I mean, as long as we have this, unequilibrium, if that's the right word, between supply and demand and what the OEMs can produce, then everyone who's in the aircraft leasing space is certainly, in terms of growth, if you don't have that order book, everyone's being pushed into that secondary channel or, sale leasebacks directly with carriers. And so it's gotten so much more competitive and drives yields down. And so that's where, we would like to grow more on the narrow body side, but we don't want to do anything that will, compress our yields or dilute them, I guess is a better way to
There's a
say
price
it.
for everything.
So, yeah, yeah. So, we like the fact that, and we're happy that when we look at others who are not in this situation, that we do have that order, we've got that skyline of growth. And, Cerium and others are very happy to kind of put out there in the marketplace. And I know other lessors are parroting this too, that, as you go through the rest of this decade, there are fewer and fewer lessors that have an order book position. I think it's something like, 15 or so, or 25, 26. But by the end of the decade, it's like 8. So we're one of those 8, right? And so we, at least, even if nothing else changes, we're going to grow the fleet. So, that's a great place to be, having a speculative order book.
I guess the, when you think back to like regional lessors, which, I mean, from your standpoint, I would just say you're just a lessor at this point. You just have, right, a few more turboprops, but, there seems to be, I think from the investor side, there's always probably the question that you get, which is like, look, we saw what happened to NAC, right? And so how do we ensure that you guys don't do the same thing, right? And so how do you deal with that? Because I mean, obviously they, it feels like for them, they, grew too fast, did a few different things, and unfortunately it just didn't work out for them. Yeah. But so as you kind of try to explain your story, like how do you kind of walk around that to be like, look, this is why we're doing things differently, is why we're going to be, we're going to be around for a while. What's your story behind that?
So, I'm not as familiar with, all the issues and problems that went down at NAC. I have some, high level understanding, but my, distillation of that is that there were a lot of things on the financing side and the funding side where, they might have made more mistakes. It wasn't necessarily about who their lessees were and, restructurings and things like that and actually getting paid. They might have written, I don't know, poor leases. There are a lot of things I don't know, and so I probably shouldn't comment on that. But what I would say about Avation is that, we have a pretty solid balance sheet. I mean, maybe even, that's probably understating it a bit, because we look at our credit ratios. Again, this is something I just put in our deck, is that when you compare us to the 8 to 9 other sort of investment grade lessors that you can get information out there, publicly disclosed information, our ratios look very, very good. We're like right in the middle of the range pretty much on things, net debt to EBITDA, et cetera. In fact, on a couple of them, we are actually the lowest of the entire set of, 10 lessors. Okay. So the message there is that our balance sheet, even though our scale is much, much smaller than an investment grade lessor, our credit ratios in some measures look like an investment grade lessor. I mean, so, our leverage at sort of 2.5 times, right, is right in the range of most between 2.1 to 2.9, and anything below 3, which is kind of where our target is where you kind of want to be. And certainly that's what the rating agencies say would be investment grade. So, we need to just build our scale and probably diversify our funding. The agencies want to see the majority coming from the unsecured side, so in the bond market, and we're like about 55%, I think, funded from the bond market and 45% from the bank market. But so our balance sheet is strong, is what I guess I'm trying to say, and that's where I would focus on saying this is why we're not going to go down the path that somebody like NAC did.
The idea of scale is quite fascinating to me from the lessor perspective, because when you had the GCAS AirCap, or the acquisition of GCAS by AirCap, there was all this conversation about they're just going to be too big to compete with. They have all the scale. They're gonna run the board and win everything. And as far as I'm aware, that hasn't happened. Not that it's been a failure by any stretch of the imagination. Mm-hmm. It's just been a bigger lessor, right? With the scale benefits. Yeah. But the smaller lessor has still been able to compete. How do you, being on the smaller end of the scale spectrum as the pure play, how do you think of scale in terms of, and we'll just put AirCap on the opposite end, obviously.
Yeah.
How do you think of what the benefits of scale are a little bit more obvious. How do you think about the benefits of the smaller scale and the stuff that you're able to do that maybe the aircraft scale can't?
Well, I think, interestingly, you kind of drive to the heart of the question of why are we in the turboprop space, right? And I mentioned things like lower competition, et cetera. But you know what? When you're at this smaller scale, it takes a lot fewer aircraft additions to grow the fleet by 10% or 20%. Yeah. You think about the ticket size and what AerCap has to do to grow that same 10%. For us to grow 10%, we need to add 3 aircraft, right? And they have to add 120 or something like that. So it's
or go buy another lessor,
yes,
right? Which
exactly.
they have to buy, right? They have to. Like it. Yeah. There's no pure growth. I'm sorry. Carry on.
Yeah.
I find it.
Well, no, I think we're talking about phases in the aircraft leasing industry, where we are in this cycle and, where we're going to go, big picture type stuff. Right. And I think it's pretty clear, doesn't take rocket science to figure out that we're more in an age of consolidation right now in the middle of this cycle than we are in sort of new platforms and new lessors emerging. We certainly, we saw the 2010 wave coming out of the global financial crisis. We saw a few, not so many yet, really come out of COVID, right? But we're really seeing, I think, more people believe in the benefits of scale. And yeah, I think we're probably, treading over well-trodden ground when we talk about what those benefits are, whether it's,
sure,
being able to deal with, big airlines in size, being able to deal with the OEMs in size, et cetera. We, again, we obviously we want to be bigger, but we're okay with where we are in the sense that, we're nimble and, why do smaller lessors still have a place in the marketplace? Because at the end of the day, it's having an aircraft available when an airline needs it, right? And so even if you're a large lessor, if you're all sold out or you don't have anything coming off lease, et cetera, you may not be available in a campaign. And so a smaller lessor just might be there, right? And so we don't have problems, transitioning, for example, our ATRs, right? We've done a bunch of these. We've had 3 with Mandarin Airlines, and they're transitioning to 3 different customers. With a third one, I think it's just been completed actually, and then we've got another transition coming up next month in May. And so it's not hard to do business, I guess, even at our size. We do have at least some critical mass, and we've got those new aircraft coming on stream. We've got other stuff that's expiring, and so it's in a way it's being there at the right time. And so there's kind of room for everybody, right? I mean, there's room for smaller lessors. I'm thinking like IAT, right? They're a relatively new platform. You've got Griffin, which is relatively new. Since they started in 2020 January, right at the beginning of COVID. So why do these things keep occurring? I think it's because you can find investors, you can find new capital to invest in this space. And although that said, it really does seem to be that how many new leasing platforms are actually sort of old school on balance sheet models like ours and the bigger guys, as opposed to asset management, right?
Sure.
And almost everybody who starts out today is in a fundraising campaign looking for that pension fund money, that insurance money, hedge fund money, private equity, whatever it might be. And then they're managing their money invested in aviation assets. And so, it's an interesting time in the industry. I think that, we're like in a very good place in the cycle. And again, as long as the OEMs don't get their act together and produce aircraft when they say they were going to produce them, and I do think things are improving, but I'm not the only person forecasting this. There's a lot of uncertainty about how this is going to go for the rest of this decade, whether things will be back in equilibrium in supply and demand. And until then, if you've got aircraft, you're in a really good spot, I think. And so that's the smaller ones and the larger ones. But it probably also drives some of that consolidation as well, right? Because again, you're not really, again, where are the sources of growth coming from?
Yeah. It's the seller's market. That's going to drive consolidation because that's how you buy. And that makes sense. But it also kind of leads to the conclusion that this consolidation cycle is a cycle, not the new trend forever and ever. It will shift back to some point. And there's always, certainly not from a dollar perspective, but there's all, like you mentioned, IAT, Griffin, I can't remember the name, but I just saw a new one pop up the other day, or one I hadn't seen before. Like, there's always somebody. Yeah. It's at a very small level, as it has to be when it just starts. So at some point, that's going to shift back. I think the question is more, you're certainly not. You're 20 plus years. That's not new. And you're also not small from that perspective. At what point does that cycle shift? And here you grow, and this is where that potential energy becomes interesting. Kind of the growth runway available, especially in the narrow body space, is just so high for you on a percentage basis than, say, AirCap is the obvious example there.
Yeah, indeed. I think, when I think about the big picture stuff in the industry, right, I think about, like you say, when could there be another wave of startups, right, come into the space, and certainly it does seem that the natural time to do that is when in a down cycle, right? When aircraft availabilities become greater, when, potentially the barriers to entry become a little bit lower, right? And certainly, cost of funding, et cetera, coming right out of those things. And when you can pitch to a potential investor and say, look at the growth runway we have for the next, 5-7 years. And if you're thinking about, hedge funds or private equity, which have an exit strategy, which might involve that kind of time frame, right? 5 years to an IPO or to a trade sale or whatever. So I think, it doesn't seem to me that, like I mentioned earlier, I don't think we're in a period where we're going to see a lot of platforms starting up. And I think, one of the questions I think you had sent me, Garrett, was, what sort of big constraints, right, in terms of how would you start up? And I think the obvious one, again, is aircraft, right? It's not necessarily about funding, and it's not about talent or human capital, because people like IAT, we've got a lot of experienced people in this industry, go to iStat, go to Airline Economics, whatever, and you can see all, the people. And when there is consolidations, the Macquarie coming up, right, with DAE, the Air Lease situation, there are going to be good, experienced people available, right? And some of those inevitably will form together, ex-colleagues, and they'll form another platform, and they'll find a way to, look at our track record. We can find, we can find aircraft, we can certainly find funding, we can raise funds. I think, so the human capital side, no problem right now. I think there's a lot of that, a surfeit of that. And then the market is certainly there. I think, if you can get assets, it's just getting assets. And I think that's probably going to be the biggest constraining factor.
Yeah. Look, it's still, even in the current environment, right. And I'd love to get into that in terms of things that are going on today. But, the deals have been, like, if you want to get into aviation, you've got to figure out, how to beat everybody else in terms of it. It comes down to price and better understanding what you're buying, but it's still so competitive, and it's been on every level, right? Whether you're, in the lending space or the leasing space, or it's just been, overly competitive. And so it's been, I think, a challenge. I think the benefit that you guys have is, you do have kind of you deal with a market segment that not a lot of other people deal with. And so I think that's one of the benefits that you have. But, so I guess from maybe transitioning a little bit away from that into, we're in an environment today where obviously there's, with the war in Iran, right? A lot of stuff going on, a lot of focus on oil, on fuel. So how does, when you think about your kind of market segment and your market base, right? How is that being impacted right now? Are you guys seeing you guys having any different discussions based on what's going on? How do you see that in terms of how you guys try to do business?
Yeah, it's a topic of the day, of course. And, we get that from investors. We talk about it internally. We'd certainly like to see an end to, hostilities as quickly as possible. And, when we talk about things like fuel prices and investors come to us, we'd say, look, obviously or not even obviously. I mean, there are people who do ask us this question. Well, how's it, fuel going to affect you? Well, we don't fly the airplanes, right? So obviously, there's no direct impact there. Certainly, it impacts our customers, and then cash flows, and so we probably are on a heightened level of sort of monitoring, the ones that are maybe at the lower end of the credit spectrum in terms of ability to pay and how fuel is impacting businesses, cutting flights if they're actually cutting utilization of our aircraft, these sorts of things. It's not something we've seen as a pattern yet, and to be honest, we don't worry so much about we certainly want to see jet fuel come down. I think the bigger concern is all this potential for a shortage, right? So if airlines can fly their aircraft and maintain cash flows and can achieve, from my time as an analyst, you'd say 50 to 75% of the fuel delta you could recover from fuel surcharges, from airfare, from various other factors, right? You can deal with it. It's hard to deal with when fuel spikes suddenly if you're an airline. If it's gradual, you can always deal with that much more easily and quickly. I mean, more effectively. But it's a different ball game if you can't actually take off at all, right? If in fact there are jet fuel shortages. And so we have 80% of our fleet in Asia Pacific. So, obviously we're headquartered in Singapore, started in Asia. We are actively diversifying that both from the customer base and a geographical base. I mentioned South America earlier. The other 20% or so is in Europe. Well, it happens to be the case that, Europe and Asia are places where there's a lot of discussion in the public space and media about how many days left of jet fuel do we have. None of our customers are saying we're going to have to ground airplanes because of this. And I think maybe I'm going to speak from a personal perspective, not necessarily with an aviation hat here, but my view is that there's so much more going on in terms of impact beyond even just aviation. Obviously, when it comes to energy and energy security and diesel prices and gasoline prices or cooking gas in India, that I find it hard to believe that we will not be able to find a situation where we resolve it before it ever gets that bad, that there actually will be, major hub carriers in Europe not being able to fly most of their summer programs, whether it's Lufthansa or, Air France, British Airways, Ryanair, et cetera, all like cutting their flights by 50%. I mean, nobody has a crystal ball, so we don't know that. But I certainly think that it's hard for me to imagine a worst case scenario actually coming to fruition. And the same, I think, goes in Asia. Obviously, there are countries that are being very cautious about, exporting any jet fuel that they do refine. So, thinking about things like Korea, Thailand to an extent, Vietnam, China has also said similar kind of things in terms of, okay, whatever crude we're going to get, we refine, we're going to keep in the domestic market, or we will send it to you guys in Hong Kong. So, we're okay in Hong Kong by and large. I don't think we can't take in, it's a non-zero risk today, but, in terms of our customers and anyone in the airlines leasing and financing space, that aircraft are not going to be grounded because of this. But I think the pressure will be on to reach settlements, to open the straits, et cetera, that we won't ever get to that point. And I do think that, the U.S. administration is certainly it appears to be looking for off-ramps, although the latest news is, sending oil, Brent was up to 123 today or something. It's a wartime high now.
I don't even look at the news anymore. It's not good. It's all about the U.S. looking at the potential for what new might occur in terms of, new armed action, right? So, we're in a difficult situation. Don't want to get into the causes and why we're here necessarily. I do have my own views, but I just think that it'd be hard to believe that the pressure on the administration itself to come to resolution, just from domestic politics alone, and then even from just international pressure as well, that we don't go to the cliff's edge. That's my hope anyway. So it's interesting, and there's an interesting dynamic between like the impacts on aviation right now are not exaggerated, but they're real. They're heightened simply because jet fuel is not like considered the priority. Like as much as they can prioritize gasoline and diesel, they will, because the entire economies of the world rely on those so much more. So jet fuel is disproportionately higher. That's impacting aviation. But on the flip side, like you said, I am hearing of airlines cutting capacity everywhere, but they're not actually doing it. These cuts are not coming out. There's some near-term cuts. We're seeing a fair amount out of Mexico, Vietnam, I think. But these are small airlines in the grand scheme of things, right? So we're not actually seeing the market cuts that everybody's talking about them making. I think Lufthansa announced like the tens of thousands of cuts, like, oh yeah, over the next 5 decades or whatever. So it's like, it's nothing. And it wasn't the decade. It was like this. But look, it's something, but we're not actually seeing it. The other thing too, you mentioned airplanes on the ground. That's not much of a concern for me personally, from a lessor perspective, especially because these CEOs and all of us in aviation, the most kind of poignant memory we all have is not having enough airplanes, right? Nobody wants to be the airline without airplanes. So the decision to park an airplane or reduce utilization is very different from returning or kind of impacting your own supply. And I think that protects lessors a bit. And it protects the OEMs for sure. They're protected. Doesn't matter. So it's a bit different. This is, maybe there'll be some airline failures and then that's impactful, but there is a protection mechanism in there.
Well, I think the protection mechanism at the moment, again, these are moments in time, is that, it's that OEM production stability issue, right? And so that will protect an airline or make them think twice about an early return, right? Because, how long is this going to last? How long, if we had to ground it, would it be grounded? We still need that capacity on the other side of it. And so we wouldn't want to do that because we know how hard it will be to get another airplane or just to, what lease rates that we will have to dip back into the market and get. So, I get the point about, I'm not so concerned from a lessor. If you are leasing that airplane that's grounded, it does become.
But hey, listen, no accrual time, residual values just kind of creeping up a little bit.
It's a low time airplane. Yeah.
I think what's interesting is that, obviously that helps these cuts at the margin in capacity are helping fares stay high. And if demand is still reasonable, then yes, that's again another piece to help you recover some of that delta, as well as the operating cost of not flying the flight also helps potentially close or keep the margin, destruction. So I think it's really interesting that, say, somebody like Cathay Pacific, who's obviously here, in my town, had March figures come out, and it was like they increased capacity, ASKs, by 5%, but the number of passengers that flew was 24% up in the month of March. And I can tell you from, now, they're not reporting yields or anything like that, but I can tell you the anecdotal evidence from airfares, and particularly from places like Hong Kong to London, where you were having, in the early days of the war anyway, economy fares were $4,000, $5,000, $6,000.
Yeah, but in fairness, that's because Emirates and Qatar and Etihad,
of course,
they were gone out of that market.
Yeah, and so you talk about near-term winners and losers. I think anybody obviously flying nonstop, including potentially the Chinese, but Thai Airways probably gets some spill, and Singapore Airlines gets some, and Cathay, got a bunch as well in the Asia to Europe market. And how long that's going to last, with the big three in the Mideast, maybe at sort of 40, 50, 60, and maybe up to 70, 80% of capacities come back now. It'll be interesting to see how passenger preferences, dictate, well, do I want to risk flying through a Mideast airport and seeing what happened in early March when people were stuck there for days and days and days?
Yeah.
Or do I just want to pay a premium and fly nonstop? I mean, in my own case, we actually had to decide. My son's studying overseas in Europe. He's in the U.S., but next he's coming back, Hong Kong, and then he's got to fly in August to go to Europe to study for one term. And we decided to take a European carrier and go nonstop, or at least connect in this case. And rather than what do we think the situation will be at the end of August? And so I'm just a microcosm of many small decisions of people making the same thing. And how much will people go back to those big three, Mideast carriers? It'll be interesting to see, because relatively speaking, I'd say the traveling public has pretty short-term memory. But because I actually, even from my own perspective, I'm thinking about, should I go back to New York for my 35th college reunion at the end of next month? And the cheapest airfare by far in the market is one of those Mideast carriers. And I'm like, do I risk it?
That's the question. The question isn't, will I connect?
Kids, family, or business on the line, not that important. Yeah. I can fly in a few days earlier.
And the question is not, will I connect through the Middle East? It's how much of a discount before I'm like, okay, right? And that's what'll happen. And by the way, that discount will get less and less over time, and it won't take long. I don't think it will take even 12 months. Quite frankly, and things will be kind of back to normal. I know, aircraft demand out of Emirates is high. They're like, "Hey, you got anything?" They know, and they're not wrong. Not to mention, by the way, that high oil prices doesn't exactly hurt the shareholders, the stakeholders of the company, or of the airline,
or leaving OPEC. Yeah.
Right. Well, yeah. Right. That probably. Has all sorts of different implications. But I mean, to your point on Cathay Pacific, I mean, in fairness, that airline, this current crisis is a nothing burger to Cathay compared to what they've been through, right? They're like, hold my beer, watch this. You kidding me? We went into COVID in a crisis, and they're still they're still, just, I would say killing it, but they're relevant and successful.
I think that the point that I would introduce to listeners here is just the idea that there may be some carriers, I'm not saying there are many, that actually can, because of the demand and the yield situation, can almost completely cover that fuel delta and actually, stay as profitable in the first half of this year or in the second quarter. Again, not many. Our base case would be that, certainly airline margins are going to be compressed in 2Q. And it's hard to see, even with the Strait open, how, the fuel supply chain and all the logistics in there and the refining capacities are going to lower jet fuel price. I think when airlines speak about jet fuel, was it United or somebody, we're planning on it being, I think they said oil, right? They said oil would be $100 a barrel for the rest of the year. It's probably not. It's far from a non-zero case. I think there's a high chance. Yeah. So this is we bring it back to the lessor perspective and our perspective. Our airlines are paying. They're paying on time. We don't have any grounded aircraft. Even if we're in Asia, where some of the markets you might be worried a little bit more about. We've got aircraft in Vietnam. This is not the aircraft being grounded because of fuel shortage is not really. It's not on our. It's not on our list today. It might be soon, but I think
whatever.
It's and going back to what I said earlier, this would be the real problem for a lessor, because at one point then do you start to say, or go to your lessors and say, well, a little bit like COVID, right? Well, we need some relief here. We need a rental holiday or whatever it might be, because there's just no jet fuel for us to fly planes. That would be the bigger concern for lessors, as opposed to the high fuel price today. Right?
You could, if you're like Spirit, you could just go ask the U.S. government, and then Frontier, I think Allegiant, I think they jumped on that. So whatever.
Sounds like JetBlue is as well.
Yeah, I mean, why not? I mean,
right.
The getting's
everybody's
good.
gonna be lining up. If it happens, everybody's gonna be lining up.
Yeah,
Listen,
two,
the
two and a half-
Spirit.
$2.5 billion is what I saw. So
I think that was lumped.
500 million for 5 airlines. I don't know.
Yeah, it was something like that. I can't remember exactly who was in that, but Spirit and JetBlue have this amazing argument to the current administration, which was, hey, the Biden administration made this terrible decision, wouldn't let us merge, and this never would have been a problem had we merged. So you could, and you, I mean, Trump's like, oh wait, I can needle them a little bit. So the question I always get is this insane for Spirit to ask for this money, or these airlines to ask for this money? No, it's genius because they might get it. Right? Yeah. Should they? That's a different conversation. But the idea of the maintenance holidays, right? This is more of a those requests. That's more of kind of the global way and the way that would be handled. I think the way to look at that is, well, look what we did during COVID. Like, lessors now have experience doing this, and by the way, the ones who were most successful actually leaned into it. Not that we're like, hey, we want to give you free money, but they were like, hey, all right, well, let's talk about it. Let's talk about how we might structure something based on what you need. And then that just positions them for better long-term growth. The airlines want to work with them. I don't think this is a major risk. I think it's more of an opportunity, kind of like we were talking about during COVID, but we didn't have any major blowups on the leasing side necessarily then.
Yeah. Well, even I mean, based on from what I've heard from a lot of lessors, even with rent deferrals, that happened during COVID, I mean, I would say there's probably an extremely high percentage of those that were paid back and were right. I mean, because it wasn't just kind of like, hey, we're just you don't pay us and then you don't have to pay us ever. It's more like, no, we take it off now, we get paid back later. And I think most of those have been paid back already. Right. Yeah. So it's kind of like, from that, it's not a bad story of like, oh yeah, if you're gonna do rent deferrals, like, and we're not gonna get it back, and it's like, well, no, for the most part, like it worked out, right? So it's still a good story to, if we have to do that, we'll help our customers, but then, like, this is not gonna last forever, right?
It's called a rental holiday, not rental retirement.
Yes. Correct.
Yes, exactly. Yeah. I think, I mean, speaking in generalities, not necessarily what we would do or not do at Avation. I think that if you can extend the lease, but that means lengthen the terms, lower the rents, but the economics still look roughly the same in terms of contracted revenues, etc. Obviously, there's a discount. I mean, longer term, the DCF, whatever, will look a little bit different. But those are outcomes which most lessors are prepared to accept. Yeah,
and I don't think anybody's afraid to have those conversations.
And I think it's not even like prepared to accept. I think those are good outcomes, generally speaking. Yeah. So I mean, to the extent that airlines could hypothetically, do that in this crisis, and I certainly I would expect there are some out there that looking at restructurings or whatever may already be thinking this kind of thing. Those outcomes are not bad for lessors. You look at what happened in COVID, right? And there were a couple lessors, obviously, that got in trouble. Again, the NAC example, which I think wasn't necessarily driven by what happened to them, rather than how they grew and built the business, right? I think that was more structural, rather than cyclical. And, there were others like Voyager, I guess, which, Azure acquired, where they were a relatively concentrated, in wide bodies, in one particular asset class. But, you think about, there were not a lot of examples of lessors that ran into stress. And even ourselves, obviously, we had to shrink the fleet, but we've been through the cycles. We've been through the global financial crisis in these 20 years, and we've been through COVID now. And so when we look at what's happening today, we're battle hardened, the risk controls, the risk processes, the kinds of things that we think we need to do. And this probably goes for the rest of the street as well. We've been through it, and we've been through it not that long ago. So memories aren't, forgotten, basically. Mm-hmm. So I think, the leasing community come through all of this, the current conflict in 2026 in general, in pretty good shape. And when my last job before I was at, before I joined Avation, when I was at Bloomberg Intelligence, I was a senior analyst, similar to those older, prior investment banking equity research roles, doing the same thing, covering Asia Pacific Airlines and lessors more on a global context. We wrote a big report it's been 15 months ago, I think, and we built a model how we think the rest of this decade is going to kind of look for the lessors in terms of profitability at a macro level. And I think we're in a good spot, at least until the OEMs sort of get their acts together. I think, when you talk about aircraft values and lease rates, and particularly even for older aircraft, I think that's going to be, quite strong through most of this decade. I think in the report, we were thinking maybe it was 2028 when things might become in equilibrium. And again, is it going to, is it going to be sooner or is it going to be later? It seems like it's more on the later side. But at a certain point in the model, then what we focused on was that okay, the older aircraft, then as new aircraft come up, well, obviously those lease rates and those residual values are going to then start to come back down, right? And then by the end of the decade, you could be into a not a down cycle necessarily, but the growth in terms of yields, gross yields and net yields and profits and margins, etc., might then shallow out, because once we get into an OEM equilibrium, that's probably what's going to happen. And so thinking about the current year, I think we'll look back on this as kind of a blip, and not even that big of a blip. I don't know, when we look at the end of 26, we look at the investment grade, lesser profitability, or even ourselves, that we're going to see much decline in profits from what's going on.
And that's
as opposed to the airlines.
Incredibly reasonable. I mean, it's just based on the kind of velocity of how things impact airlines. It's immediately, and the lessors, it's, revenues are monthly. They're paid monthly or whatever. Yeah. And that's, I find it really interesting looking at kind of the global space as fuel does what fuel's going to do. The difference between high lease rates, high aircraft values. You have lessors complaining today, man, lease rates are great, aircraft values are great. The problem is I can't buy anything. Like, well, that's all connected, right? Like, so you have some, and Steve Williamson mentioned this on our last podcast, and I think he's absolutely right. Guess what? A downturn or just in the aircraft value and lease rate space is great, because then we can buy again and refill and complete that cycle. It's all just part of the cycle. Mm-hmm. And you have to have both sides of that cycle to come. And that's just on the value side. That really doesn't impact the profitability from a lessor perspective materially, I wouldn't imagine.
No, and I think, I think it's interesting when, obviously when Airbus reports its results and analysts get on those calls and say, well, have you had any cancellations, or anything related to the conflict? And of course the answer is no, because the long-term planning of these cycles, and like, oh yeah, my delivery position is 2031, so why would there be, in the near term deliveries, no, we still need the airplane, etc. So I mean, look, there's some softening of things on the margin, things that happen in real time, but most of what's in our end of the spectrum in the space is not real time, as you pointed out, right?
Imagine going to Airbus right now and saying, hey, listen, I got that 2032 delivery. I don't think I want it. And Airbus is like, okay, so let me get this straight. You paid me money for a deposit and you're willing to walk away from that? Great. And I can sell it again? Like, okay. Which is the reason the airlines don't do that, right? Cancellations when backlogs are at record levels, like, okay, I mean, I'll take your money for free. It's not, and so they don't, right? I'm not concerned about that at all.
Yeah. I mean, the message we keep hearing over and over again is, like, from an airline standpoint, like fleet strategies are not changing, right? Yeah. Nobody's making changes because of this, because it's temporary. It will, I mean, it may affect, impact revenues. It may, but at the end of the day, you're still looking to grow your company. And so you're, if you've got aircraft on order, you're not changing that. Right. And, a couple of things that I think are interesting today is, and we've talked about it a little bit, is, I mean, look, demand is still strong, right? So demand is not the issue, right? It's not, you're still seeing it across the globe, right? And then on the flip side of that, you also have, I think airlines have some flexibility when it comes to their fleets because of the fact that they've held on to aircraft longer than they would have normally held on to them. And so they've got that that kind of flexibility of, look, if things get to the point where we need to reduce capacity, we've got the ability to retire these older airplanes that we held on to for another 2, 3, 4, 5 years. And we still have new stuff coming in. And so we can do that. And it doesn't necessarily, I think, flood the market with all these airplanes that everybody's going to jump at. It's just going to be like, no, we're just retiring airplanes now, which we didn't retire 2, 3 years ago. So I think there is a bit of, you've got that room, I think, for airlines to, to be able to handle that, which, will definitely help. Obviously, if all of a sudden, there is nobody can get jet fuel, that's a whole different story. But then I think that impacts the globe in a different way too. And as you say, I don't think we'll get to the point where we'll let that happen, because that has another impact as well, right? I mean, we'll cross knock wood, right? Whatever you want to say, but from that standpoint, I think for us to get to that level, right, some other stuff needs to happen. So hopefully, I think a lot of people are focused on kind of the consumer aspect of things, the stock markets, how they're reacting, right? So I think when you start to see that getting going down for those reasons, right, then things change to account for that.
Yeah, exactly. I mean, that's still, in history, and I mean, we could talk about taco, I mean, all these sorts of things. I think we will get to that. And I mean, if Europe economies are cratering because there's no jet fuel and there's also no diesel and the pressure to get something done to fix the situation has to be extreme, I would guess. And, again, domestic politics as well is going to play a big factor, I think. So,
well, even in a worst, there are a lot of worst case scenarios, but even if the strait never opens, at some point, and it will take time, but at some point, the world will be able to replace that oil. I know that sounds silly, but the amount of oil in North America that's being drilled, that's being produced every day, that can grow by a certain rate, right? The bypass options, right? Saudi Arabia can increase the overall throughput of that bypass pipeline. And it takes time to build up those pressures and get that, but there are things to do, and at some point we could replace it. Now the question is, where could we have been, and what happens then if the strait opens and suddenly there's all this cheap oil, right? Guess what? We're going to be talking about that at some point. The question is when, and because we know that the current situation is unsustainable, so do the airlines. They're like, let's just wait and see. And that wait and see means, okay, I'll pay my lease this month. Okay, next month, pay the lease. And even when they're not, when they don't feel like they're going to wait and see, they're looking at that airplane being like, man, I really want it. Like, I need that thing. So there's just a lot moving right now in the space. And for me personally, the questions that I'm getting are not about the lessors. They're not about aircraft leases. They're not about aircraft demand so much. It's about, okay, well, how are the airlines going to react? So we're still very, very early in all this.
Yeah.
I mean, I would perhaps take a different tack on the Strait of Hormuz staying closed. I think that will be a disaster because we just can't build the pipelines, and how do you extract Kuwaiti oil or Iraqi oil and all those other sources, UAE, etc. You can, Oman's got some ways to get oil, obviously, that's not on the other side of the strait, but we need to get the strait open is my view. I think you're right. We would get to a new equilibrium, but I think we're talking about 5 years or something crazy, and then a lot of economic activity will be damaged. Again, think about all the Asian economies that are worried about it now, and if that's not coming out, we'll get it open. I'm pretty sure. But
that's the real risk. What you're describing there is the real risk, which is, so the supply of oil is below the demand. The demand is driven by economic productivity around the world. There are two ways where that can be rebalanced. And one is we open it, supply goes back up. The other is that demand is forced to come down through high prices. That's a risk, right? That's a real risk. That means global recession. By the way, that is a very real risk, may even be on the path of questionable inevitability given where we currently are, right? This is a risk. The
My
question,
concern, my concern, that's global depression. But I think,
if it never opens, yeah.
an interesting segue, which would be to talk about decarbonization. And, if that happens, then you're talking about how we replace those energy sources and how it pushes people, even like at the margins now, to buy electric vehicles. And so I think, one of the topics that was, sort of potentially on the agenda today was, what comes next in the turboprop space, given that we have an ATR, order book, and, what the prospects are for alternative products there, given that it's pretty much a monopoly provider at this moment. And, my own personal view is we're not going to see anything in the next 5 to 10 years coming out in terms of new turboprop. I think, when Embraer canceled their program last November, that kind of put their cards, on the table essentially. And they couldn't get enough launch customers or partners interested in it, airline demand. But, even though they leaned on the idea that, well, the engine technology isn't quite there yet. So what's going to be happening, I think, and the most interesting thing would be, Can de Havilland Canada, restart production of the Dash 8 again? I don't know where they are. They were going to build a new factory outside of Calgary, I think. But I don't know where that's actually at. But, when could they do that? And could they do that with the engine option, right? Could they do it with something like the Zero Avia, the hydrogen, hybrid solution? Or it's just, we'll go back to using the current tech in terms of, I think they use the same engine, right? PwC, Pratt & Whitney Canada.
The 150 on the Dash 8, on the 400, yeah.
Yes, yeah. So, that's, I think that's where we're looking at for the next 5 to 10 years in terms of the turbo. ATR is in a great position. They'll probably hold that position for a while, because even if you do get de Havilland to start production again, and I would think the spark there would have to be something like the Zero Avia is a commercially viable solution. Then, the other things that are happening in this space are, people like Hart Aerospace, right? And with a 30-seat aircraft, which are more on the fully electric side or things like that. What we look at the market though, and what we talk about when we go out to investors or anyone who will listen, is that the latest versions, the PWC1, the XT version, right, of that engine, is fully SAF compatible, right? So you can, drop 100% biofuels in there. And that seems to be the most logical place, I think, that we're going to be until we get that commercially viable, hydrogen cell tech, or the fully electric tech. But even the fully electric is only going to go, 500, 800 kilometers maybe, and it's at 30 passenger price point, right? So, I think most of our customers are probably still going to be above that in terms of wanting, the sort of seats capacity that, we don't have a lot of ATR 42s, for example. In fact, we have 0 or the 72 size. Yeah. So I think, that would be where what summarized, sort of the product outlook and where we think, our positioning with that aircraft is and what other challenges could come up. And it's hard to see.
Yeah. Well, and plus whatever evolution comes out of the next level of technology, right? ATR will have the benefit of that as well, right? So yes. If somebody comes out with something, and my own personal view, I think the hybrid technology is kind of what the next generation of whatever we're going to see. I think that makes a lot of sense. But whatever comes out, right? Okay, well, ATR is just going to be like, great, we can put that on our airplane too.
Exactly.
Right. So they'll get the benefit of that. I did have a quick question on ATR. Obviously, we always hear Airbus, Boeing, delivery delays, things because of the supply chain, right? What's your experience with ATR in terms of, do you have that same issue where, you have delivery delays based on supply chain issues, or is that, less of an issue? And so is that a benefit from your customers' standpoint to know, look, you told us we're going to get the airplane on this date and we're getting the airplane around that date rather than 6 months from now, or how has your experience been from that standpoint?
Yeah, Avation's experience is, obviously with new deliveries, dealing only with ATR, not with Boeing and Airbus, is better than what other lessors would see with regard to those two OEMs. But that's also not to say that we don't see delays. We do see some, but they're not.
Yeah.
They're not really engine related. Like I think some of the worst delays you see, with sort of the 6 to 9 months that kind of slide in the delivery schedule. It's probably more on the order of 1 month kind of thing, or some weeks basically. But it's a globally connected supply chain and ecosystem, right? So the seat suppliers and the I don't want the flatbacks right here. The components and the whatever goes into the aircraft, they're the same suppliers, really, right? I mean, that are supplying Embraer and ATR as well, and so they're not immune to it. Nobody's immune to all the things that have occurred post-COVID in terms of trying to re-ramp up schedules, and we've had and broken supply chains, or certainly disrupted supply chains. So I would say that it is the same issues, but they are less impactful and on a smaller scale with ATR.
Yeah. Which, I mean, to me, I think these days, if you're 1 month out from when you were supposed to be, it's kind of like, okay, great, I'll take it. It's a non-issue. So
we've got a new airplane. We've got a new airplane coming up this next month, and I do believe it was scheduled for April. I mean, it might have been. That's in the time that I'm here. It might have been scheduled for earlier, so like the total slippage may be longer, but again, it's representative. It's not terrible. Do the airlines like it? No, they do want their airplane when they want their airplane, and when they thought they were going to get it. Obviously in certain situations, maybe it's helpful. Maybe the airlines got no reason to take an aircraft at that moment. The fuel prices there. Could be lots of other things that they can look at this as a silver lining. But generally speaking, no, it's still, we want the airplanes when we've contracted to get them.
Yeah. Well, and the other benefit to the ATR product is, at least as far as I know, you don't have, as many or if any engine issues, right? Which you're dealing with on the GTF or, the LEAP or the Rolls engines, anything else like that. So it's 100%. Definitely a plus.
And we do like to tell that when we go out to investors, and we talked about the education piece back at the beginning, about like our size and where we are in the, in the ecosystem. Another piece to fixing that perception is to tell people, what you think ATRs are, a niche product or something like that, even though they're an opposite. But in fact, they have 200 operators globally. Yeah. Right. So I mean, the operator base is similar to a 737 or an A320. Now there's 16. The latest I think deck from ATR had 1650 aircraft, something like that total flying. Obviously, there's going to be some 42s in there. There's going to be some 42 500s and 70, some of the older generation stuff. But they have like 200. Yeah, I forgot about those. The 212s. But it's a wide enough operator base, and it's liquid enough for the players who are in the market like ourselves, so that it's not an issue in terms of being marketability or remarketing, etc. Right? It is, and that's again a piece of educating investors or the public or whomever that doesn't understand that this is a widely accepted product. Lessors only want to invest in the most liquid aircraft types. And, obviously the ones that hold the best RVs, the best, remarketability. And so, the ATR fits right in there. And frankly, at this point, it's the only turboprop that does. Yes, I do know that, with AvMax and maybe some others have some big Dash 8 positions. And look, as long as nobody else is really building that many new ones, the Dash 8 is probably going to have a pretty long life. They're longer lived than economic lives than most of the narrow bodies and wide bodies. But, yeah, so we're in a good spot. In the engine issues, the maturity issues, we don't have to deal with. And Pratt & Whitney Canada continues to do, like I said, there's incremental increases like the XT version in terms of fuel efficiency and the SAF and things like that. And so it's the evolution, not revolution kind of concept.
Yeah, but boring is good, man. Boring in the leasing space. Like this is exactly what you want. And the other thing about the ATR that I'm surprised doesn't get talked about more often is from an airline perspective, it's an ATR or what? And I don't mean a monopoly. I mean, or we stop flying. Oh. Like there's no alternative. And so it stays, right? You're talking about, especially in island countries, you're like, or they don't get air service. And like, well, that's not cool. So you have this sticky is probably overused, but almost this community service benefit, almost like a public benefit, and this government backstop, for lack of a better term, that the ATR disproportionately benefits from. Simply because is this or what?
Yeah.
Yeah, I don't know if it's a government backstop, but certainly you can see in places. India's got the Udon, and there are probably some of the SpiceJet -8s and the Indigo ATR 72s are flying on some of those routes. You've got the public service obligation routes in places like Australia. I mean, the old the airline, which AirT, Cresto, and Steve Williamson's sister company now. It's ringing a bit. The Saab operator in Australia, who is that? Rex. Yeah, Rex.
Yeah.
Right? Flying turboprops. I think similar situations where, you could call that a government backstop. I mean, they kind of came in basically and took it over.
Backstop's a strong word. I admit that.
Yeah, but you do want to make sure those communities continue to get air service, right? And turboprops in most markets are probably the only, even halfway, with a little bit of subsidy, economical way to do that. It does remind me too that in terms of the previous question you'd asked about, in terms of aviation and thinking about the current situation and our customers. So, our aircraft, the regional aircraft are so fuel efficient, right? They're extremely fuel efficient. So the ATRs, sit fuel basically on versus a jet on those similar 1,000 and less kilometer range routes, and even like A220s, right? For example, a lot more fuel efficient probably than A320 Neo, et cetera, even though those are similar engines if you've got the GTFs. So I guess there's some protection potentially built in there where if an airline, because of what's going on in demand or what's going on with fuel price, has to downgauge a bit, our aircraft, we believe, will continue to keep flying. Rather, they won't be the first to be grounded, I guess, is the point. Mm-hmm. Yeah. And in some cases, to your point, Courtney, island nations, what have you, there simply is no alternative. There's no substitute, right? So it's Indonesia, Philippines. You get to a lot of that in the ATR space, and so and of course runways which can't really take anything else either, and so they're not going to be grounded. So
there's another small benefit as well, which is just the turboprop, the aerodynamics and design of a turboprop allows you more weight to tanker fuel, where you're actually filling up where the fuel is, going somewhere where there's no fuel, and then still being able to come back. Just on a percentage weight basis, it's easier to do that. But cool. Props are cool, man.
Yep.
Exactly.
That's the message, right?
On that note, but look, this has been fantastic. I'm glad we were able to get you on. So thanks for making the time to speak with us today, especially since it's so much later for you. But we do appreciate, and thanks for kind of sharing what aviation is all about and your background in aviation. It's definitely nice to meet you. Hopefully we'll meet in person at some point. But it's been great, so thank you.
Yeah, absolutely. It's been a real pleasure to talk to you guys and to meet you guys, and I'm sure we'll cross paths soon. ISTAT Asia's in Bangkok in a couple of weeks if you're flying out to Asia. If not, one of the global
not this time, yeah.
Not this time. Okay, good stuff, man. All right. Thanks a lot.
Thank you, Tim.